Hello, lovely. How you doing?
Good, how are you?
Fantastic. Welcome. You made it on perfectly on time.
Okay,
This
I
is
went
great.
upstairs actually.
Oh, really?
Oh, wow, nobody's here.
Oh yeah, shit. We should have somebody directing people from upstairs down. Is there anybody else up there?
Nobody
Okay,
there.
okay, great. Yeah. And some people came at 3 instead of 4, so
All right.
we'll get used to it. We'll tune into the frequency. Right?
I hope I didn't ask too many questions.
No, of course not.
No?
You're asking good questions.
No, I mean on the WhatsApp, really?
Yeah.
Because this morning I thought, oh my God, maybe I just... Because yesterday I had a really
Wait, what do you
bad
mean? The
day.
questions you were asking me?
Yeah, on WhatsApp.
Yeah, that's fine.
That's okay.
Yeah, always ask the questions.
Okay.
Like especially the ones where
Even if it's... Because I thought, no, maybe he's not answering because... it's all in the talk and I didn't pick up, I didn't get it or...
it's because I got drunk last night. So
Oh,
like,
that's okay.
yeah, so because we were all having the party and stuff. Don't worry, I'll answer you.
It's
Like,
okay, no,
yeah,
there's no...
yeah, because what I do is then I mark it as a. Okay, amazing.
I just didn't want to...
Encroach. Don't worry about it. No, you didn't. I'm gonna answer all the questions. Don't worry. Yeah. Hello, and welcome. Let's try this. Hello, and welcome. Oh yeah, I like this. This is nice. Hi guys, welcome to our regular powwow at Park to discuss how not to lose all of our money in crypto. Today, our focus is going to be how to enter the markets. And we just did this talk at Canggu, so we actually have given the intermediate version of this with much more detail around a lot of the stuff that I'm going to talk about. Please make sure you watch that if you're interested in learning a deeper level of how we do the analysis and what are the finer details of how you look at the US dollar and bond markets and stock markets and tie it all together into one vision. I'm going to do a little bit of an update, but the main gist of it is going to be from there. So the question that keeps coming up is, when do I enter the markets? Right? That's one of the first ones. When do I enter the markets? So here's a simple way of thinking about it, okay? You enter the markets when this room is this empty. That's rule number one. Can we turn the camera around and just show how many people are here? Because when there's nobody looking at crypto, nobody wants to learn about it, nobody wants to talk about it, nobody wants to like, I'm done with crypto. That's the moment where you come in and buy crypto. Okay, that's a great rule. And when this room fills out and we have like everybody getting rich apparently, and then grandma wants to put in her house, that's when you get out of crypto. Okay, that's a pretty simple way of looking at the world and understanding when to enter crypto and when not to enter crypto. Okay, and it's so useful for me because I get to see the room pretty regularly, so it's an indicator. It's a great indicator. That's half a joke and that's not, because seriously, what you want is, when everybody hates it, you buy it. When everybody loves it, you sell it. That's just a simple rule, right? Like what they say, buy when there's blood in the streets, especially if it's your own blood, right? Like right now, I'm bleeding hard. So you know what I'm doing? I'm buying. But that's also because from October until now, we built revenue streams that are generating cash flow with the cash we made in the crypto markets. And now guess what? We have a bunch of cash flow coming in when the market is completely down, and our cash flow is working in revenue streams in the meantime. So we're going to go through all that. We're going to discuss it. We have a presentation. I'm going to kind of go through it and go around it. This presentation, if you're here and you're newer, this presentation is a continuation of the strategy sessions that I take people through, and it is going to be available to you. In the previous one that we did, previous session, we talked about you have to do an analysis of yourself. You have to analyze, who are you as a person? How does your psychology work? Are you somebody who likes to take risk? How much risk do you like to take? How do you calculate risk? How do you set up goals that allow you to be able to have a balanced perspective on what the space is and what you expect out of it? You come up with timelines of how long you want to invest for, and then you come up with a strategy of exactly how you want to invest, right? So we've gone through all that. Please watch the previous recordings if you have not. That will give you a lot more details on that. A lot more detail on that. Today we're going to talk about how to enter the markets themselves. So we ended off on the rules of psychology, which is as far as this whole space is concerned, it's just one big mind fuck. So that's all it is. So if you understand the rules of psychology, you're already insulating yourself from a lot of this stuff. But when it comes to entering the markets, this is going to sound really simple, but patience. Patience is the hardest thing to come by in this space because everybody wants to get rich yesterday, right? And it's like, I've been in the markets for 4 months. I still haven't made money. And it's like, wow, you've been here for 4 months and you haven't, where's your Lambo, right? And it's like, some of us have been here for 4 years. And, some people rode it up 4 years and rode it back down. They went Lambo and then went back to like a Honda, So, yeah, welcome to the club, right? But the patience, there's two parts of patience, right? One part of patience is when you're in the market, you have to be patient enough for the process to play out, which could take 3 years at this point, up to 4 years, that's a lot of times. But you also have to be patient enough to stay outside of the market. Like from October until now, sitting outside of the market was the best thing you could do. And outside of the market means US dollar. Sitting in the the US dollar was the best option you could have had. Over euros, over Japanese yen, over gold, over real estate, over stocks, over bonds, over even derivatives, over crypto, over everything. If you just sat in the US dollar, you crushed it, right? So cash at times is the place to be, right? Pro tip, if you want to sit in the US dollar and you're looking for a stable coin, USDC is the only stable coin that is up to par for me to be able to put my money into, okay? Not USDT, that thing is a scam. But that patience piece is huge because you know what you do? You just outpatience everybody. Simple as that. Okay, I'll outpatience you until everybody gives up and leaves and the room empties out. You're the last person sitting in the room like, I'm still waiting to buy it. And then you buy it. And then people will come along and buy it. They won't be patient enough to sit in the markets. They'll kind of want to either take profits too quick or panic when it goes down and stuff. You just sit in the market and outpatient them again. Here's a fact. 100% of anybody who's ever bought the solid cryptos would have not lost a single penny if they didn't sell it lower than where they bought it. I mean, that's just a fact, right? Like, if you just don't sell it lower than where you buy it, you can't lose money. Like, functionally, you cannot lose money. But 100% of anybody who's ever bought the solid cryptos not only would have not lost money, they would have made X's, 10 X's, just for sitting in the markets and being patient enough. Now, I'm not going to go too deep into this. Again, we just did a talk about it, but another thing that people are missing is we're watching crypto like it's an entity upon itself. We analyze crypto like it's an entity upon itself. As a matter of fact, what you'll see is you're like, I have Solana. So you go to YouTube, you go Solana, and then some little kid's gonna pop up, like a 22-year-old who just literally took the diaper off. Is gonna be like, wow, I'm drawing a line here. This is where the line is. It's the line, support resistance line. I know where those are. If it goes above this, then it means this. If it goes below this line, then it means this. And that's what we're doing. We're listening to toddlers who've not lived any life. I'm 33, I'm still a baby. You should barely listen to me. You're lucky I listen to 60-year-olds and translate it. But we're listening to kids describe what the price action of our cryptos is doing to make decisions. That's not how this space works. What we're talking about is money. We're talking about liquidity. Liquidity is called liquidity because it moves like water. Money moves like water. And where money moves, when you think about where most of the money is, it's actually in the derivatives markets. About $2 quadrillion, about $1,000 trillion is in the derivatives markets. Most people don't even know what a derivative market is. It's a casino that basically doesn't add value to society, but that's where most of the money is sitting, apparently. Then the second most amount of money is sitting in bonds. Third most amount of money is sitting, I think, in real estate. Fourth largest amount of money is sitting in stocks. And real estate is $250 trillion. Bonds are $300 trillion. Stocks are $200-ish trillion. All the cash in the world, all the money in the world combined is about $150 trillion. And derivatives have $1,000 trillion, okay? And crypto is less than $1 trillion of that liquidity. So for us to sit there and watch this little drop in the bucket and be like, and within the trillion, you probably have a drop of a drop. You have like a molecule of a bucket of liquidity, which is your entire crypto, and you have like a quark of that molecule, and you're watching that like, I hope it goes up. I hope it goes up. But when we're talking about liquidity, the way we always talk about liquidity is you need to think about liquidity like it's water. If it's stale, then if it stands, then it goes stale, so it needs to move. It always moves between different things. The place that it comes from is actually the ocean, and the ocean is the debt markets. Okay, that's bond markets, because debt is everything. Debt is money, debt is countries, debt is wealth, debt is everything. So actually the only game being played is the debt game in the bond markets. And the stock markets are just a derivative of the debt markets. Okay, so what happens in the debt markets defines what happens in the stock market. What happens in the stock market defines what happens in the crypto market, defines what happens to Bitcoin. What happens to Bitcoin defines what happens to the other cryptos, and so on and so on and so forth. But when you're thinking about it, visualize it like the ocean, the debt ocean is an actual ocean. It's huge. It has everything. Stocks are a local sea that's attached to the ocean, but it's much smaller. Crypto is a little puddle on the beach at the end of the sea. Okay? That's how much liquidity is actually in there. It's literally a puddle on the beach. Bitcoin's like a glass of water out of that puddle. And the crypto you're holding is probably like a shot glass of water out of a puddle. Okay? That's literally how. So now when you think about it, if I tell you, hey, there's a tsunami coming in the ocean, what do you think is going to happen to your puddle a little while later? It's going to get knocked over. First, it's going to get filled up a lot, then it's going to get completely sucked dry. So what we see now is we've seen stocks pull back, we've seen bonds pull back. What that is, you know how when the tsunami comes, the ocean pulls back? That's what's going on. The ocean pulled back, which pulled the sea back, the stocks, and the sea pulling back sucked the water out of crypto, and that's the process that's been playing out now. Again, we went into a lot more details there, but it's important for us to watch the ocean and understand what's going on there. The other thing with crypto is we have access to on-chain analysis. We literally have access to data that's being pulled off of the blockchain, that's immutable data that we can analyze. Again, we've gone through this for 2 hours. Please watch that. It takes you through the details of which metrics we look at, what stuff is important to be able to make decisions, and how to be able to see the direction that crypto is likely to move due to these dynamics. But on-chain analysis allows us to have more indicators. Okay, so now we have the physical indicator, literally how many people are interested in it or how many people are angry about it. We have the broader macro indicator. Then we have on what crypto itself is doing, not what they're telling you, but is literally what it's doing. That then allows us to really make decisions around, okay, do we enter the markets or do we not? Like, for example, right now, everybody's convinced that we're going to go up from here. That's usually not how a bottom forms. Usually, a bottom forms when everybody's just panicked about everything going to zero and just is hating the space, right? So right now, I'm not entering. I'm still just building up the cash flow that we have coming in from the businesses, getting it ready, converting it into the right stable coins, and getting it ready to deploy. But I still want to let more of the chaos play out before we turn around. When you want to enter the markets, right? If you have not learned about the cryptos you're buying, it doesn't matter which one you buy, you're going to lose all your money. Like, I could give you the best crypto, Bitcoin, buy some Bitcoin. Guaranteed you'll find a way to lose money in Bitcoin if you don't understand what it does. So the questions we always ask is 2 questions. When I'm buying something, what does it do? And where's the money coming from? Right? What does it do? And where's the money coming from? What does Bitcoin do? Bitcoin is a agreed upon method to put wealth in a place where it's definitively limited, that cannot be changed by the powers that be or governments. And that's really valuable to us. So we're like, okay, that makes sense. What does it do? It allows me to store my wealth in places where the government can't mess with it, exactly like gold. But it moves better than gold. It's more transportable, more divisible, almost more recognizable at this point. So it does gold better than gold. Where's the money coming from? It's coming from people who agree with that mission, who are willing to put in their money and hold it. Even if you take some of the money, they're just going to wait. They're going to outpatient you. And they know that, 10 years from now, when every millionaire wants it, and there's only 21 million Bitcoin, but there's 52 million millionaires already, every millionaire can't even have it. right? So the money's coming from people who believe in that mission. Okay, great, sounds good. You need to answer this question for each thing that you buy. And like, when you normally ask a question from a project, like, what does it do? They'll go, well, this is the new decentralized platform based on decentralized autonomous organizations to revolutionize the payment infrastructure of SMEs. And you go, okay, English? Can you say that in English again? Was that Russian? Was that English? Like, I don't understand what you just said. And they'll describe it and you go, I still don't know what you do. And they go, yeah, give us money, right? That's no. If you can't tell me in 3 sentences what it does in your own language, it doesn't have to be complicated. What does Bitcoin do? It stores money like gold. Great, good. It makes sense in your paradigm. Fantastic. Okay, what does it do? Explain it to me in 3 sentences. And where's the money coming from? Because if you can't answer that question, the money's coming from you. Where's the money coming from? I don't know. It's coming from your pocket. You know, where's the money from for Luna coming from? It's not, is it? The money's going, it's leaving. It came from your pocket and went into Wall Street's pocket, okay? So what does it do and where's the money coming from? When you start answering that question, you should find that about 90% of the projects in this space are completely worthless. And anybody who tells you crypto is the best thing on the planet and does not tell you that 90% of the projects are worthless, do not listen to them. Especially your friend. If your friend comes to you and goes, buy this dog ear thing. I bought dog ears. And you go, why? I made a lot of money. You go, what does it do? It makes me money. Where's the money coming from? Who cares? It's in my pocket. It's like, okay, that's not what I want, right? So if somebody tells you that it's all hunky-dory, if somebody tells you blockchain and decentralization is the path to freedom, and they haven't even read the word blockchain, like it's literally blockchain. It's here to block you and chain you. It's not here to like give you freedom and stuff. Let's like don't get it twisted, okay? So you should be thinking about these things. There's literally YouTube influencers with millions of followers pushing this message to you, and we're like, yeah, 2 million people follow him. He must be right. No, absolutely not. If they're below 30, almost don't even listen to them. Unless it's on-chain analysis. On-chain analysis is a new game. Please listen to the youngins. They know it best. But for most of the other stuff, you better, you know, have done enough inner work to know who you are as a human for me to listen to you about advice, right? So selecting the right expertise is huge. Here's a nice rule of thumb. When somebody has like 50,000 followers on YouTube, I give them more respect. Because the masses will never listen to the people who are actually intelligently explaining to you the stuff. I know like gods of analysis who've been doing it for 40 years, who have harmonic analysis that just has nailed everything. 23,000 followers. He's been doing it for 8 years or something. And I know some other guy who has 2.5 million followers who constantly rips people off without even trying to rip people off. So pick the right expertise, learn about the crypto itself, learn about the cryptos from the right place, learn about why is it good, and then learn about why is it bad. Always try to disprove your own thesis, and then you'll build a nuanced argument about what the thing is and why it's valuable. Now, here's a simple reason why all this stuff is valuable. Right? Everybody's like, these are coins. Like, why is everybody buying coins? Like, first of all, they're not even coins. They don't even exist. They're literally just code on a ledger, right? What this is the base layer technology of the future of the internet. The base layer technology that will build the world for the next 250 years, at least. Maybe longer than that. This is like buying HTTP. You know that thing that's at the beginning of all the web addresses that we have? It's like buying that. Back in the day, if you would have told people to buy that, they were like, what is HTTP? You know? It's like, am I buying the @ sign and the A with the circle around it? Right? We're at that stage, but this is going to be the single greatest revolution of existence. And I mean existence down to experience, down to money, down to gold, everything. That's going to happen. That's going to play out within the next 10 years. That's what you're buying. If you buy the right stuff, that's what you're buying. If you buy the wrong stuff, you're going to lose all of your money. And the chance is 90%. There's a 90% chance that you're going to pick the wrong thing, and then you're going to lose all your money. Okay. So let's say you've learned about yourself. You really know who you are as a person. You know how your psychology and your energy works, what your relationship is with money. You've learned about cryptocurrency. You understand, okay, this is the future of the internet. I want to buy some. You have done the research on which cryptos are the ones that are actually doing stuff. What do? They do useful stuff. And where's the money coming from? From useful things. Because money only comes from one place. It comes from adding value to real people's lives, right? If the more value you add to real people's lives, the more money you're given in the world. So if you can't figure out where the value is being added to real people's lives, it's a scam, okay? And especially if they go, what does it do? It makes money. Okay, that's a scam, bro. Like the only things that have a function of only making money are scams. Everything else are businesses and real things, right? One big mistake a lot of people make is they come into the crypto space and they take all their money and they put it into crypto. That's such a big mistake. It's like, if I'm telling you, hey, this thing might make you a ton of money sometime within the next 4 years, but along the way, it could go down 90% before it makes you that money. And you just took your entire life savings and you put it into this thing because you're so greedy and you want to, we're all so greedy. We all want to make the most amount of money. And then you don't have money to go buy coconuts and fly places and enjoy life and actually live the lifestyle that you need to. And you're sitting there waiting for 4 years to make money. You're completely missing the point. Like, wasn't the point to have the coconuts and be on a beach and fly places and hang out, right? Have coconuts. That's literally the only point. Who cares about crypto if I can't have coconuts? So first of all, putting all your money in there, hoping that you make the most amount of money, and then sitting there for 4 years in stress, reducing your own quality of life, is an absolutely unagreeable exchange for me. Like, I don't care about money. I care about what it does for my life and the people's lives who are running. But the big mistake is people think the only way to make money in crypto is to put it into crypto. No, not at all. Like, if we're building the future of technology, if we're building the future of the internet, those are businesses. Those are literally businesses. So you can put some of your money into businesses that are adjacent to crypto or not completely unrelated with crypto, that are revenue streams that make you cash flow. Okay? So then it's like, okay, I got $100,000 to invest. I'll take 50,000 and I'll put it into revenue streams. They'll be slower to produce cash, but they'll produce cash flow on a regular basis. And then I'll take 50,000 and I'll put it into crypto. And if that 50,000 sits there for the next 4 years, I couldn't care less. I'm making money from my revenue streams. So I'll give you some examples, right? These are the ones that we have running live that we get people into. We are running blockchain nodes on a blockchain called Pocket Network, POKT. It's blockchain nodes that are being rented by other blockchains to run RPC calls to actually do the work that they need to have done. It's basically fractionalized server power, fractionalized rentable server power. We're running these nodes. People rent the nodes from us to actually do the work that they need to do. They pay us money. We get a monthly payout. One, right? We're getting contracts from the Indonesian government to build merchandise for stores. It has nothing to do with crypto. We put in money. 3 months later, they give us money back with a 12% return. 12% within 3 months, that's like a 50% return compounded annually. That's ridiculous from the government. But it comes back every 3 months. We're tokenizing mines in Chile, but just pretty soon it's going to be Philippines and here. And anybody who holds the token, who stakes the token, is going to get dividends paid out from the mines. So you get a yield paid out from the mines, but a real yield, not like a scam yield that you get in DeFi. We're now going to be building real estate because a lot of people want real estate and flipping the real estate, and that's going to turn into a revenue stream. There's a bunch of other ones, but these are all things that make you money while you're not even looking at it, right? And the other thing is, with the mining token, it's a mining token that's a registered security that's going to be on the blockchain, but it's a physical asset that's a commodity. So what you're doing is you're entering the commodities asset class, crypto asset class, securities, stocks asset class, and you're getting DeFi because we're going to pay you a yield. So now you got a blend of 4 different asset classes that balances out your risk because you're not just in one asset class, right? If you're only making money one way in your life, you got to move to the future. Future is a place where you don't make money one way. You got to have at least 3 ways of making money, and at least one of them out of the 3 needs to be one that makes you money while you sleep, right? So Why am I saying all this? Because people don't even think about this stuff. They go, oh, take the house, sell the house, put it into crypto. And then sit there pulling my own hair out and ruining my relationships with my loved ones because I'm so angry about how low crypto is. That doesn't make sense. Take some, start generating cash flow. Invest it in yourself. You're probably you're the single best investment you've ever made. You never fail you, okay? So invest it in yourself, invest it into your inner work, invest it into your businesses, invest it into other places, and then have a measured amount of it that goes into crypto. Usually for people, what we do when they sit down with me is I, first of all, put them through an education course that teaches them about crypto itself. Then we sit down and we build a wealth map for them that includes their entire life, all their assets, all their revenue streams, all their everything, visually laid out in a way that makes sense to them and to me. And then we work together to execute that plan. Okay, there's people actually helping people do this. So if this sounds too complicated, we have help. But once you have all of that in place, then you really need to understand the risk that you're taking. You really need to understand the risk that you're taking. Because risk is equivalent to reward. Risk and reward can be used interchangeably. But the more risk you take, the more risk there is of you losing all of your money. But you get the reward for taking the risk at that point. And most people don't even understand how to calculate risk in crypto. Like in the previous conversation, we explained how to calculate risk. But a simple way of doing it is finding cryptos that are made by people who run the world. That's my way of doing it, okay? My way of doing it is I find, okay, who has all the money in the world? Like, we know there's a few of them, okay? There's just a few people who have all the money in the world. Okay, we know their names. We know their companies, BlackRock, Rothschild, Rockefeller, okay? I'll just go read their documents. I go to the World Economic Forum, I read their report on crypto, and then in the bottom, there's a list of cryptos that they're saying, hey, this is what we're gonna build the future of the world on. And I go, great, you own the entire world. You build it on whatever you feel like building it on. So thank you for telling me, because I'll just go buy it now, right? That's a pretty simple way of doing it. That really reduces your risk because you're now playing the game that the ultra wealthy are playing. And when the ultra wealthy say something, they make it happen, okay? Sad reality, but it's true. Then we look at, okay, who is running it, right? When Luna came along and people are like, great, a South Korean kid came up with a completely new system that's gonna back the US dollar. And I was like, that doesn't sound very good. That doesn't sound very good because the US kills people for less, like for nothing. And you're telling me some kid is coming along and he's creating something that he's going to use to back the US dollar, and he's going to create a version of the US dollar. He's going to print US dollars? Come on, we all go to prison for that, especially not this kid. And I was like, okay, well, maybe let's see what happens. And then they served him a subpoena in the US while he was there, and he just put the middle finger up and he walked out of the US. And I was like, man, you just poked the devil. Like, they own the dollar. And you're telling me you're going to tell them to fuck off and they're going to let you live? And then you saw what they did to him, okay? Those kind of dynamics are real. You have to understand, like, am I entering like a feud or something? Like, who owns this? Who's running this, right? So again, what I do is I just go find the stuff that's owned by the elites. For those of you guys that have been listening for a while, you know I'm a complete conspiracy theorist. I think the biggest conspiracy in the world is that the government cares about you, that schools educate you, that hospitals make you healthy, that food is medicine, and that what they call medicine is good for you, and the government loves you. I think that's the biggest conspiracy in the world. If you believe that, you're a complete nut, okay? But I do believe in the fact that the people who own the world run the world. So we just find what they're doing and we do it their way, basically. So now let's say you've selected a risk tolerance. How do you quantify the risk? How do you look at a number that gives you a general idea of how risky something is, right? One simple way of doing it, it's not perfect, but it's a very simple way of doing it, and it's pretty effective. If there's 20,000 cryptos out there, about 20,000 cryptos today, and 90% of them are scams, that leaves about 2,000 cryptos that are even worth buying, right? So if you just look at the market cap of a cryptocurrency, right? The Bitcoin market cap, $300 billion, right? What that means is the world today values it at $300 billion. That doesn't mean there's $300 billion of cash there. That just means that's the price, that's the hypothetical value that would come out if everybody sold at today's price. What it does mean is there's about $150-ish billion of actual money in there. $150,000 million. $150,000 million is in there. Somebody put their own $150,000 million inside. They will have done some research, right? You can assume that. So then it's like, okay, that's pretty safe. If like somebody's put $150,000 million inside, I think they've done like $40, $50 of research along the way. So I can leverage their research. If there's a project that's $20 million market cap, that means there's only about $10 million of money in there. And $10 million sounds like a lot, but $10 million, like especially nowadays, is being just thrown around to different places, right? So that's not very safe. So a simple way of doing it is look at the market cap. I just go top 30, low risk. 30 to 80, medium risk. 80 to 160-ish, high risk. Everything above that, insane amounts of risk. And the great thing with risk is like, okay. Remember we said risk is rewards. Okay, if I have this crypto and it's $10 million, and I know if somebody puts $1 billion in it, it's going to do 100x, right? So that means if it has the potential to do 100x, I don't need to put very much of my money in there, and the 100x is going to make me a ridiculous amount of money. I can put 5% of my money in there. That's even too much, but 5% of my money. When it does 100x, I get 500x or 5. You get the idea. You get a lot of money, but just putting a little bit into the risky stuff. So you need to spread out your portfolio in a way that you pick your risk range, you see what you are okay with as a person, what level of risk you feel okay going to sleep with for the next 4 years, and then you pick the tranches. Like I'm a medium risk person. Okay, well, I'm going to go 30% into low risk, 40% into medium risk, 30% into high risk. That brings you into a medium risk person. So that means a third of, I'm putting in $100,000, a third of that goes into low risk stuff. Well, low risk is the top 30, right? Obviously, then you got to know what it does, and because you could still find a Luna and get Luna'd, right? But and then it'll spread you out. So even if your 30% high risk was to disappear, your low and medium risk would make you more than enough money, or vice versa, right? Now, the thing everybody focuses on is how to build a portfolio. Everybody just goes, Sim, just give me the coins. Just give me the coins and I will leave this meeting. Everybody's just been waiting all these meetings just for me to tell them a list of coins. And I'm going to tell you a list of coins today, by the way. For the first time ever, I'm going to tell you a list of coins. But I could give you all the best coins and you'll find a way to efficiently lose all of your money inside. Constantly. Everybody does this. You want a good coin? Bitcoin. How many people have lost money in Bitcoin? 92% of the people who put money into Bitcoin lose their money in Bitcoin. Like, it's not the coin. It's how you're playing the game that causes that problem to happen, right? So, it's not the coin. It's how you're playing the game that determines how much money you make. I can tell you a good investment, gold. Let me know when you make a lot of money from it. Right? And there's also a misunderstanding that people think we're just going to go in and just hold this forever. Right? I'll buy Bitcoin and I'll hold it for the next 10 years. I'll get really rich. Will you though? Will you? Because you have bought one Bitcoin and your goal is to make more Bitcoin, right? But you can't make more Bitcoin by just holding one Bitcoin. Like, that's like mathematically, functionally impossible. And you will have spent 10 years without money. And your knees will be like this when you're done. It's like, great, I have money, but my knees don't work. I gotta spend the money on my knees now. Like, dude, who cares? You're young. You know the most expensive thing? A billionaire said this, okay? They said, if you have 30 years to live, you have 1 billion seconds to live. You are a billionaire in the thing that every billionaire will pay you all of their money to get. If they could buy your billion seconds, they'll give you $100 billion and they buy your billion seconds. Because $100 billion is totally worthless, but your billion seconds is worth the most amount of money ever. So you're a billionaire, but you keep acting like, oh, I want money and all this stuff, right? Anyways, that's a side point. So how do you select the portfolio, right? My simple technique is I just look at what the people with all the money are doing, the owners of the world. Because what they do is they release documents years ahead of time. They've been doing it constantly. Like, go to the World Economic Forum's website, click on COVID-19, go to the COVID-19 action platform section, there is a flood of documents where they're describing all of this stuff to you, all in place, all in public. They literally pay money to try to get it to you, but nobody wants to listen these days because we read articles about articles. We don't read the source. But in those documents, they're telling you, we are going to build the world with these cryptos. Why? Because we own the damn world, right? So if you just look at what they're telling you and listen, it's pretty easy for you to figure out the ones that because if we're revolutionizing everything in the world, you just have to find one. If you were there when oil was reinvented, you crushed it. When gold was invented, crushed it. Electricity, crushed it. Internet, crushed it. Just one revolution and you became generationally, ridiculously wealthy. We're revolutionizing internet, money, gold, experience, physical seeing, all this stuff, all in one. You just have to find one and not lose all of your money, okay? And the way you do that is, the way I do that is I go and find the ones that they are telling me in their own documents are the ones to buy, right? And the funny thing is, those tend to be the cryptos which people call shitcoins. Because, you know, that's why we're poor. That's why we're poor in the first place. Because they'll be like, you know, Cardano does 100x before everything else. And by the time everybody got there, it just, shitcoin. Yeah, 100x, shitcoin. Yeah, no problem. Yeah. Gonna revolutionize all of Africa and most of functionality. Yeah, shitcoin, for sure. XRP popped 4 years ago and just, it's a stable shitcoin. It's a shit stable coin. Okay, and they're like, oh, IOTA, nothing. Cello, nothing. Algorand, nothing. Right? The coins won't do anything because they don't want you to look at those coins. Luna. Look at how much money Luna's making. Go buy Luna. Look how much money dog ears are making. Meme coins are making. Go buy those. Look at how much money anything else is making. Just go buy those. Don't buy the real shit because we still have not deployed the regulations that allow the smart money to come in and buy those things up. So they're keeping you away from it. Okay? So you'll notice this trick. And we're going to go through the list and then you can do your own analysis on it. Along with calculating the risk. First of all, if you're a beginner, do not go below the top 100. Simple as that. Do not go below the top 100 because that takes 20,000 coins and whittles them down to less than 1%, 0.5% of those coins. Right? That really reduces your risk. Now you go into the lowest 0.5% of risk and these coins still do 20x. Bitcoin just did 20x in 2020, right? That's amazing. But you also have to calculate or understand the sectors that are coming up, right? Crypto has this there's this viral nature to crypto. Whenever there's a cycle, whenever there's something going on, there's something going on in the world that gets represented in crypto. Like back in the day, when Bitcoin became the Bitcoin is gold narrative, it was the hottest thing. And then Ethereum comes out, and then the hottest thing was ICOs. Oh, we can program apps. It's hot. There's a lot of money to be made. And now we forgot about ICOs, then we went to DeFi. 2020 was all about DeFi. And then when you do DeFi, you go, what are you doing? They say, I take money that I earn, which is like my hard-earned time, energy, and love, and I convert it into dollars, which are pretty worthless already, but sometimes I need them. And then I convert it into a stable coin called USDT, which is legit worthless. It's an actual scam. And then I take it to a platform and I convert it into some banana coin. And then I stake the banana coin and I get golden banana coins. And I take the golden banana coin and I stake it and I get pink banana coin. And I'm like, you have solved the central finance problem. This is so amazing of you. You're right. Decentralized finance is really going to solve everything. All we needed was a bunch of bananas that are completely worthless, that don't do anything, right? And then one day the market, Celsius is going to collapse and Luna is going to be dying and you're going to be trying to unstake your golden bananas and it's going to be like blockchain busy. Sorry, no liquidity. No idiot wants to enter. You're the last idiot left, right? And you go, okay, fine. I got my golden bananas out. I got my bananas out. I turn it into Tether. You hope to God Tether still exists. If Tether goes bankrupt, which is gonna for sure, you're done. And then hopefully you can convert your money back out to, so that was DeFi. It's so useless as functionality. Now, metaverse and gaming has come along. And this is here to stay. Metaverse and gaming is going to take over the entire world. Within 8 years, we will not look at each other. We will not look at each other like this. Like there will be like somebody sitting here and I'll literally have to be like, oh, you're not real. You're like a Siri. Literally, you're gonna have assistants walking next to you that are gonna be more sentient and more knowledgeable about everything than most of the people that you want to talk to. So it's not gonna be like, hi, I'm Sim. It's gonna be like, hi, I'm Sim. This is my assistant Siri. Oh, nice to meet your assistant Siri. They can have a God conversation while we just kind of, that's the world we're moving to. And it's gonna be in the virtual, so completely virtual reality. It's gonna be in the real, it's gonna be augmented reality. And we're building XR, which is gonna be a blend of the virtual and the real, so you can't tell the difference between the two. And this isn't other people doing it, we're doing it. You either come along or we're gonna do it anyway, okay? Like literally. So when metaverse and gaming and all this stuff is coming along, and you're getting the opportunity to again buy the base layer of those things, that is something you should pay attention to. Now, 90% of those projects are gonna die too, because like 90% of startups always die. But when you do the sector research, you realize, okay, there's certain sectors which are guaranteed, which are 100% guaranteed. Like we're entering the tokenized mining sector because we're like, hey, the whole world has woken up to the fact that the world is based on a bunch of fake stuff, doesn't have real value. And real value is commodities, like everything is a commodity, right? The money's gonna move towards commodities and crypto, like Raoul Paul's video where he's like, he talks to all of his hedge fund buddies and advises them. And he's like, where are we moving the money? And they're all like, we're moving it to technology, crypto, and commodities. So we're like, okay, we'll take technology, crypto, and commodities, bring it together and get there before everybody else. So by the time their flood of money comes in, we can buy it. So you have to do this analysis around the world, like what's going on. Because if you come into the NFT game late, you're the sucker. If you come into the DeFi game late, you're the sucker. If you come into any of these games late, like anybody who thinks that they can just buy and hold Bitcoin, the game has changed. How's it been buying and holding Bitcoin for all of 2021? Anybody just really loving buying and holding Bitcoin now? Hodlers? No, right? Because they know the game is, they know what we want to do is hodl. They go, oh, you want to hodl? Here, it's going to go from here to here to here to here to here to here. You still want to hold it? Right? So the roller coaster you're on has changed completely. Okay. We're picking coins. We calculate the risk. We calculate which sectors they're in. So what you do is, like if you have X amount of money to put in, you ideally want to have like 10 coins. A normal human cannot handle more than 10 coins. 10 ideas in our heads running in parallel that you have to watch. People end up getting 20, 30, 40, 50 coins. And it's like, you can't watch those and you're probably not going to be able to operate in the right way with the right strategy. But those 10 coins, let's say, should be in different sectors, different risk ranges. They should be doing different things for the world. And the money should be coming from different places. And we're going to go through all this. Another piece that most people don't think about is the regulatory compliance risk. Nobody's even thought about this. I remember 2.5 years ago when the FATF, the Financial Action Task Force, released their regulations, their recommendations for regulations. Anybody who understands the financial system, we were like, this is it. This is done. They've defined exactly what the regulations are going to be for crypto. Now the regulators just need to act like they're the ones drafting it all up, but the FATF controls exactly how money moves across the world. So you could have seen that, and then you could have seen, hey, Luna's not a good investment at all. Because in their regulations, it clearly defined which assets would be allowed to back stable coins in which way, and what registries you would have to do as a bank. And decentralized systems can't. They literally can't, okay? So today, the regulatory risk is if you're on platforms and things that run on USDT, you're going to lose all your money, guaranteed. Within the next 1.5 years, all of your money will disappear. Because Tether is a worthless coin that's supposed to be backed by real commercial debt, but it's actually backed by worthless Chinese debt, because Chinese are not paying back their debt anymore. So if you are anywhere in an ecosystem that depends on Tether, you're regulatorily going to be destroyed. That's a regulatory risk. Luna, you want to like decentralize freedom, and you regulatorily messed with a system that the guy flipped a finger to the system, to the regulators. They destroyed him, And now they're coming to his house like, come on over, we want to arrest you because you don't mess with us. Those are regulatory risks, right? Going forward, there are, like, again, all the documents are there for us to read and learn which regulations are coming across the world. Those regulations are going to make it so that most cryptos won't be compliant. They can't be compliant. Wallets won't be compliant. Wallets will be so incompliant that you'll just stop using wallets. Not because they'll stop you, because they can't. You know, like, remember torrents? Who here remembers torrents? Torrents? It's open, it's free, it's unstoppable, right? It still exists. Do we use it? No. They gave us Netflix. $11, and we're like, freedom schmeedom. Give me the convenience, right? That's exactly what's going to happen with wallets. The idea of wallets is going to disappear. And our kids are going to be like, why? Why did you want this, like, self-custody coded into my own wallet stuff? Like, it doesn't make sense. We have a new system where somebody just holds our crypto for us, right? The regulators are coming after crypto in a way where you will not be able to participate. We will not be able to participate. You'll need to be a certain level of wealth to be able to participate. That's not even talking about the central bank digital currencies that are coming out. They're changing money in a way where your autonomy, your autonomy, your freedom, your financial sovereignty is going to disappear, right? For example, you know we don't own the money in the bank, right? That's not our money at all. We signed paperwork that said, this is not my money. I'm giving you an unsecured loan of this much money that's not backed by anything. And they went and wrote laws that said, oh, the next time banks go bankrupt, we're not going to do a bank bail out. We're going to do a bank bail in, where the unsecured lender's money is the first one that we take. And we go, wait. I have insurance, FDIC insurance. FDIC has $89 billion to cover $21 trillion of deposits. I don't know exactly how they're going to spread that one out, but it's not really going to be covering everybody. And here's the kicker. FDIC is the negotiator of that process. So when the banks go bankrupt, the FDIC comes in and goes, not only am I not giving you the money, I'm going to tell you how much less money you're actually going to get. And this is coming by 2024, okay? That's not even considering that there's a completely new banking system coming out, ISO 20022 banking system, that's going to make it so that taxes will be automatic, 100% tracked, QR code, social credit score, automated everything. You cannot escape it. The reason why I'm talking about all this stuff is, like, these are the regulatory risks that we're all walking into, right? The people who are like, I'm going to go buy Monero because it gives me privacy and I can operate outside of the system. Good luck. Good luck. Take $1 million, turn it into $10 million and try to take it to your bank. And they go, where did you make it? They go, Monero. And then they go, okay, well, how did you not launder this money? And you go, I can't show you because it's a privacy blockchain. I literally cannot show you. And they go, great. Thank you for giving us the money. It's blocked and we're coming to your house to arrest you, right? People don't even realize they're doing this. So these things are all benefits, though. For me, they're benefits. Because I just go like, okay, there's a regulatory risk, right? Great. Who owns the regulators? World Economic Forum, International Monetary Fund, World Bank, Bank of International Settlements, you know, the global structures. Great. What are you guys going to use? What are you building? USDC? Check. I'll take it. Bitcoin? Check. Ethereum is owned by JP Morgan. MetaMask is owned by JP Morgan. Nobody even knows that. They're getting, the investors are now suing Consensus for the fact that they secretively sold it to the banks. Check. Check. And I know I'm in Ubud and people are like, did he just say JP Morgan check? Banks check? Yeah, whose money do you want to make? Right? You don't make money, you take money. They make money. The mines make money because they actually pull money out of the ground, well, value out of the ground. You take money. So whose money are we going to take? I want to take their money because it's also the safest place for me to know for sure that there's going to be a lot of money there, right? And then I'll give it to conscious projects. You don't invest in conscious projects because you invest to take money, right? In the old world, it was like, okay, I invest and I wait and all this. Yeah, in this world, no. In this world, you take the money from the people who you have disagreements with, and then you give it to projects. First of all, you take the money from them, you put it into revenue streams that generate value for people's lives and generate cash flow forever. And you take some of the cash flow and you feed it into projects. You give it to projects that you want to change the world and create the new earth. And you take the rest of the money and just put it back into crypto at the bottom, let crypto go back up, take profits from crypto, put it more into your businesses, and now your businesses make you more cash flow and money. Now you're projects have more cash flow and money. Plus, you got 17 businesses that are running and making you money in the background. That's the game. So, back to picking the coins. I'm just going to go to the list of coins. How about that? I'll describe why these are the coins. Which camera's on? If you lose all of your money by picking these coins, and people do that constantly. These are good coins, but if you lose all of your money, that's your fault. Okay? Don't blame me for this. This is why I don't do this, and most of you are not going to watch this, but whoever's watching, you can easily lose all of your money picking these coins, okay? Because you'll play the game the wrong way. Bitcoin. Bitcoin is made for the elites by the elites. It's made by the CIA or black industry or whatever you want to call it. Oh yeah, it's Satoshi. It's a Japanese guy. Just a sweet old Japanese guy just created a new paradigm, a new asset class, a new place to store money, a replacement for the US dollar, and released it and gave it regulatory pass-through. It's because the SHA-256 algorithm that Bitcoin runs on was created by the CIA. That's public knowledge. The people who worked with Satoshi, and yes, there are people who worked with Satoshi that we know of, they worked for the CIA. So it's not too far of a stretch. And it's probably not a coincidence that they killed the guy, which is another classic CIA. Huh? Because when I want you to bring blockchain into your house, like, I'll back up. You remember the web? The net? What does a web do? It captures you, right? What does a net do? It captures you. It captures you. It captures your children. It captures your attention. It restrains you. We use it every day, and you guys probably have never even thought about the word. Now they wanted us to bring blockchain into our house. Blockchain. If they just keep going, block, wait for it, chain. Do you want it? We go, no, I don't want it. I don't know what the hell that thing is. Like, blockchain, this just doesn't sound good. It sounds like prisony. It sounds like prisony stuff going on. So they're like, oh no. A wonderful man named Satoshi Nakamoto created a land of freedom for anyone looking to operate outside of the financial system. Nobody can stop it. Nobody can track it. Dude, it's on a public ledger. I can track it. Yeah, that's just so free. I can track it. But don't worry. Nobody can check it. Nobody can do this stuff. Freedom from the dollar. Bring it into your houses and give it to your kids. So it's a Trojan horse. They Trojan horse their way in, and we never even accepted the word that it's blockchain. But regardless, Bitcoin belongs to them. Bitcoin is going to get regulatory pass-through, but they're going to make it very, very difficult for you to own Bitcoin. Because Bitcoin is proof of work, it uses up a lot of energy. Environmental, social governance taxes are going to make it nearly impossible for you to own Bitcoin, just like it's going to be nearly impossible for you to own real estate, because the goal is to take everything from you, because you'll own nothing and you'll be happy. That's the goal, right? To make you really happy for not owning things. Ethereum. Ethereum is owned by JP Morgan and the powers that be. And it has the most amount of value running on it. It's actually the most functional crypto that exists today that's actually being used. It gets a green light. The only stable coin that I love is USDC. And yes, it's specifically because it's centralized and is controlled by them. XRP, my favorite. I never shut up about it. It is going to be the base layer of money, international money movements. It's actually going to be the central bridge currency that sits in between all of these currencies that now don't talk. Like the yuan and the dollar don't want to talk, but also the ruble and dollar don't want to talk. But ruble and dollar need to talk, right? And then when you make digital versions of ruble, digital versions of dollars, digital versions of yuans, if they trade with each other, the other country would have the financial data of transactions, which is a security threat. So what you need is the world fracture. So now Middle East is trying to make their own currency. South America is trying to make their own currency. Indonesia and China just set up a yuan reserve. There's a few of them that are trying to make their own currency. But what you're going to need is you're going to need to have a neutral bridge reserve currency that sits in the middle, that's not from any country, that's going to allow these transactions to happen globally without the data being transferred. And that's what XRP is. And fun fact, the patent for one of the things is owned by a Rothschild, which is like a golden check mark for me, because I'm like, great, that's the one that I want. Cardano, where's Matt? Cardano, we'll put a Cardano on the list. It's owned by the elites. Solana, that's literally in the World Economic Forum documents. Pardon? Matt is part of the elites, yeah. He owns Park, so like, what's going on there, right? What's going on there? Polygon, Avalanche, Chainlink, especially Chainlink, because it has data. Stellar, Algorand, VeChain, Filecoin, Quant, IOTA, Graph, Synthetics, and XDC. Out of the top 100, those are all the coins that, at least I've found, that are going to be part of the future 100 years of the world. And they play very functional roles within that space, and they're owned by the elites, for the elites, built by them. In all their documents, they're explaining to you that this is what they're going to use to build a world. By the way, if you guys have questions along the way, feel free to ask questions, right? What's up? Yeah, please take this mic. My hand's hurting at this point, Mike.
Yeah, I want to go back to the wallets.
Yes.
Yeah, wallets disappear now. So we still have crypto.
Banks.
Thanks.
It's okay. Because we need it for the recording.
Oh yeah,
Yeah.
okay. Well, that's all I have to
Banks.
say. So
We're going back to the same old system.
What
It's
was
gonna
the
be-
question?
Like, if wallets are disappearing, where do we keep our crypto? I mean, you could keep it in a wallet if you want, but they're going to make it very, very difficult for you to actually regulatorily comply with the knowledge necessary for you to be able to then use that money in the banking system. So it's going back to the banks, custodians. Because we're not allowed to touch money, you know that, right? They think we're too stupid to touch our own money. Like, when you buy a stock, what happens? Like, first of all, when you want to buy stocks, this is what you do. You go talk to some other person and you go, hello, financial advisor human. I don't know shit about stocks. And they go, we know, that's why you're here in the first place. But you have money, don't you? Yes, we do. All right. And you would like us to put it in places which you don't understand. You go, exactly my plan. And they go, great. We'll put some here, we'll put it in the mutual benefits, and it's gone. It's literally that South Park episode, okay? But it's like, but they'll just take it and they'll put it into like, let's say they're good. They take it and they put it into an ETF. You don't even know what an ETF is. Sounds nice. Okay. What happened? So they took my money from my bank account, they put it into their bank account, which is probably a platform. And the platform created an account for you. And then it said, we are going to decide for this person that they need to buy this asset. Let's say I need to buy Apple. Not even ETF, let's just say Apple. Great. A request goes out from the platform to a broker. Hey, broker, we need to buy Apple. Broker goes, 1 sec. Broker sends a message, and this happens like instantaneously almost, but broker then relays the message forward to the stock exchange, and they go, we would like to purchase. And the stock exchange goes, for sure. Sim would like to purchase some Apple? They go, 1 sec. Their buddies at Goldman are like literally right next to them, because a signal takes much less time to reach them than it does me. They quickly ping a signal to them like, hey, Sim's buying $1 million of Apple. Did you guys hear? They're like, oh yeah, no problem. We'll buy $1 million of Apple at $9.99, and we'll sell it to Sim at $10, and we'll make the cent on top. And they go, okay, great, sounds good. The transaction doesn't even happen there. They contact the DTCC, the clearinghouse, and they say, can you put Sim's name, first of all, can you put Goldman's name on these stocks first? And they go, yep. I go, great. Us buying raised the price 1 cent. Now, can you put Sim's name on there? They go, yep, no problem. And not even Sim's name. Can you put the financial manager's platform's name on there? And they go, yeah, cool. So then now my financial manager's platform, which is probably under a holding company, becomes the owner of the stocks. But they don't even get them. They're being held by a private corporation called DTCC, one of the biggest corporations nobody even knows about. And then the financial manager gets a message saying, Sims bought the stocks. And then they come tell me like, you have, I don't have stocks. What? I don't have shit. I don't even, it's 16 layers of custody between me and there. And then when they lose all my money, they just go, the market, bro, the market. Why'd you lose the market? Simple as that. Because you don't know what's going on. So today, we've taken that power back and we're storing it ourselves. They don't like that. They want us to give it back to the custodians and give it back to the brokers and give it back to back, because they all want their pieces, right? We're gonna fight. It's not gonna last long. Again, they're just gonna give us convenience. And the first thing we're gonna do with the convenience is we're gonna drop all of our ideas of freedom. We're just gonna go right for the convenience and we're gonna give up all our freedoms, right? Because this is a prison that we're building for ourselves. Like Brave New World always said, the best prisons are the ones that people build for themselves. This is a blockchain that we brought in, and this is how it's gonna play out. Okay, so let's get back to the point. Selecting coins, okay? We have now understood who we are as people, what kind of investing is a good fit for us that helps us go to sleep, what level of risk are we okay with, what are our goals in participating in this space. If you're like, what's he talking about? Please watch the previous recording. There's a lot of details in there. Then we've gone and selected the sectors which are hot. We picked, I don't know, 10 coins that are spread out between sectors and spread out between risk ranges. And we figured out how much of our money goes into which tranche, right? Now we actually get to the point of actually investing. Like, how do you, all right, we're not even there yet. One sec. Then you need to select the right exchanges. So along with this regulatory risk, there's a huge risk going on right now that you don't know which exchanges to use. Because when you look under the hood of most exchanges, they're using USDT as their liquidity tether, which means they're using worthless dollars, which means they're worthless. And all the regular exchanges like KuCoin, Binance, Indodax, many of them, they use USDT as liquidity. And one day they'll just go, oops, USDT went bankrupt. Sorry, all your money's gone, right? The only ones that use dollars and euros are Coinbase. They're just horrible. They're the worst people to deal with, but Coinbase is by far the best exchange to deal with, global exchange with the best service and backed by dollars and euros, and FTX. Those are the only three exchanges that are actually have the money actually sitting there rather than just, faking it. If you're on other exchanges, especially Binance, if you're on Binance and you think Binance is safe, Binance only has 30% BUSD. It has 70% fake dollars. And it's huge. It has massive throughput. And you think they're the biggest in the space, they're not going to die. Get ready for that process to happen for sure within the next few years. They've already been killing Binance in different countries. Now they're going to come after Binance itself. And, what's his name knows it. So for most people, if I had to recommend an exchange, Kraken. Like, there's bar none, nothing better than Kraken unless you live in New York or Washington State or Iran or North Korea. Because the problem with custodians and exchanges is there's a bankruptcy risk. We just went through this with Celsius. Everybody thought Celsius was just a great idea because they're giving you 8% returns. But actually what they were doing is they were taking your money and putting it into the same Ponzi schemes that are all of DeFi, and they lost everybody's money. So the bankruptcy risk is there, right? So you need to make sure you're protected from that bankruptcy risk. Okay, you picked your coins. And actually, what ends up happening with these exchanges is the coins that you pick that are on these exchanges are already pre-vetted in many ways. You won't be able to access 99% of the coins that exist out there on these exchanges, but that's good. Because the greed part of you is going to want to be like, yeah, but I can make a lot of money on these little coins. A lot of money, right? And it's going to be like, it's okay, just take 50% and put it into KuCoin. How do I put it on there? I got to turn it into Tether. It's okay. We're going to make a lot of money and you're going to lose all of your money. You're being greedy, right? And we've talked about the psychological warfare that goes on in the background. All right, we're supposed to be going through this. Yes, okay, great. So yeah, let's go to the next one, please. this. So this is a document that is the strategy document that I use for all my clients. That's now going to be available on the website. You can watch all these courses. You can go through this document, build yourself a strategy that will lay out step by step how not to get screwed over. So first of all, yeah, we already spoke about this, but this is the psychological roller coaster that you go through. Down here, you're fearful, and so you don't buy it when you should be. Up here, you're greedy, so you don't sell it when you should be, right? But we again spoke about this in the last meeting. Please watch the recording. Let's go to the next one, please. Let's go next. We've already done this. Wait, we didn't do rules yet. Okay, no, let's go back. Let's go back one then. Sorry. Let's go back to the psychology. Okay. Yeah, Wall Street cheat sheet. This is how they take all of your money. Like, literally the only point of control that they have on you. We'll get you a recording of this. We have a recording. But the only point of control they have on you, like the only single point of control they have on you, is one number on one screen. The number of dollars that your portfolio reflects today. That's it. If they make the number go up, you get happy and greedy. If they make the number go down, you get scared and anxious. Okay? And this is the entire game. Rinse and repeat it. This played out during the tulip mania 500 years ago because of psychology. This played out in 1930. This plays out on the 6-month scale, the 3-month scale, the 2-year scale, 4-year scale, right? Bitcoin is $5K. Nobody wants it. COVID comes along, it goes to $3,500. Everybody's panicked. Everybody's in depression. This thing sucks. My retirement money's lost. I hate it. I'm angry. Oh, I never want to touch this stuff. And then it goes up to like 10K. Nah, I disbelieve. I don't believe that this is going to happen. Disbelief. Then it goes up to 20K because it was at 20K last time. Then it goes up to 20K and people are like, hey, whoa, thing's doing something. I think there's hope. And so they come in and then they buy it here because here you have fear of buying it, fear of losing money. Here you have fear of missing out. Still fear, just a different kind of fear. And then you end up buying it right here. And the first thing it does is it just drops on you. And this looks huge when it's actually happening. It looks like, wow, 30% drop. And so you sell it. You buy it here, FOMO. Here you get fear of losing money. You just want your 70% back. You sell it again. Then it pumps again. You get FOMO again. You buy it again. Then you sell it again. You buy it again. You sell it again. You buy it again. And you sell it again. And you just rinse and repeat this. And you think this is funny. This is literally exactly people's strategy. This is how people efficiently lose all of their money, okay? Well, let's say you're one of the smart cookies and you're like, you know what? I bought it here. I didn't sell it. It goes up, I don't sell it. Goes down, I don't sell it. Goes up more, I don't sell it. Okay, you've been through the bumpy stuff. Then by here, you know what you start to think? You think every time it goes down, it goes up. And I mean, I've gone from $10,000 Bitcoin to $30,000 Bitcoin now. Come on. I've tripled my money. You start calling mom, we're rich. Number on the screen says we're rich. I just tripled the money, man. It took like 40 seconds. I'm a genius. Everybody's getting rich. You become optimistic. But this is the beginning of greed. Because as soon as you become optimistic that this is the place to get rich, what do you do with things that make you money? You definitely don't sell them, right? Like logically, like we would never sell things that make us money. And the smart money knows you're thinking like that. And then it does go up. You're optimistic and then it does go up. You go, $40,000 Bitcoin? Oh my God, time to get fully invested. Time to open a church of Bitcoin and start praying and having chapel around this stuff, right? And then it goes up more and you're like, oh my fucking God, like Jesus Christ, this is just insane. Everybody needs to buy it. This is the point that your friend comes and tells you to buy it. And that's the point. You probably don't know what you're talking about and you go in and you buy it right here because your friend's like, oh my God, time to get fully invested, time to gonna tell, like, this is so common. We have a chart. Okay. This is weird. Hello? I have to like eat the mic at this point. But this is where your friends will tell you to buy it. And now it's at a $55,000 Bitcoin. Then it goes up to 65, 67, And guess what? You're high off the euphoria because you're seeing a number on a screen and you're becoming a millionaire in your head and you're on a jet and you're just like, I am the richest person alive. I quit my jobs. Don't just fuck off. I'm rich. But you're not. You have no money, right? And I'm a genius. We're all going to be rich. Like this. Go back to the YouTube thumbnails from November. They literally said we're all going to be rich, and it was like, right? And as soon as I saw that, I was like, get the fuck out. Get the fuck. I got everybody out. We actually got everybody out between here and here, right? But what happens is you're so greedy here, and you are sitting. You went from 10 to 67 in like 40 seconds. Okay, you're high. Then the smart money starts taking profits, and it drops. And what do you know? When it drops, it always goes up. And you're high, and you're blind. They drop it, and you go, no, it's fine. This was May of 2021, 67K. This was July, 30K Bitcoin. But you're like, no, it's fine. We just need to cool off. It's gonna go up because it always goes up in the 40 seconds that I've held it. And then what does it do? Slowly creeps back up to this time was special because it went to 69. It went right back. And the people were crying to me here, like, I wish I sold it at 67. I'm like, it's at 69. Sell it now. And they're like, we're all going to 100K. A toddler on YouTube told me we're all going to 100K. And I'm like, we're not. Because we can see the data behind and we can see, hey, whose money are you taking? And the people with the money left. The whales left. So I don't know whose money you're planning on taking, but it's not my money. I'm getting out. Goes right back. Everybody's complacent. We're all told we're going to go to 100K. And guess where we don't go? But it's like, then it's like January. You get a little anxious, like, oh, I think this is done now. February, March, Luna, Celsius. Ah, shit. Mom, I'm not a millionaire anymore. Mom, the number says I'm broke. Mom, we're really broke. I lost the house. Okay, and you capitulate. You sell at a loss. And then, who shorted the market? Why did the government let Luna happen? So there should be regulations. Mom's retirement money's gone. And we're back to the same old shit, right? Do you see the game? All they literally did, is they made a fake number go up on a fake screen. And then they made a fake number go down on a fake screen. Think about this. If I put in $100,000 here and I got 1 Bitcoin, how many Bitcoin do I have here? 1. How much money did I lose? Nothing. How much money did I make? Nothing. Until I sell it, I don't lose or make money, right? So even if you do this and you know you're holding gold, you're holding the real good shit, don't worry, this is coming again. This thing, like this happened. I remember Bitcoin was like 40 cents or something. And it went to $30. And then it came back down again to like single-digit dollars. And we're like, oh, it's done. It's done. That's never going to happen again. Then it went from single-digit dollars to $200. Came back down. We're like, it's done. In the same year, it went from $60 to $1,200. And then it was done. And then it went from $200 to $20,000. And then it was done. Then it went from $3,500 to $70,000. It's done again. Okay, so here's how we protect ourselves. That number is not your bank account. Bank accounts and these numbers are not the same. That number is just a hypothetical representation of what would happen if you made the mistake of selling it today or had the privilege of selling it today. It's a hypothetical representation. Right below that number, there's the most important number. It says 1.0 Bitcoin. Okay? It's like you go and buy gold. If you're like $100,000, you buy 50 ounces of gold, and you're holding 50 ounces of gold, and then I come to you the next day and I go, now this gold is worth $50,000. And you go, okay, well, I have the gold. And the next day I go, it's worth $200,000. Like I still have the gold, still the same amount of gold. Next day I say it's worth 0, and you go, hey, get the fuck out of here. Like I know this is not worth 0. And then the next day I go, it's worth $500,000. You go, okay, here's the 50 ounces of gold. Please pass over the $500,000. And now thank you for the $500,000. I appreciate it. And now I've made the money. Now I made from 100,000 to 500,000. But the only time I calculated that was when I bought it and when I sold it. Other than that, it doesn't matter. So how about this? How about this? Here's a pro tip. Stop staring at your portfolio. First of all, buy solid stuff. Do all this research that we're talking about. But then just stop staring at your portfolio. Like, I don't look at mine. If I started telling you guys, we would all start crying, right? The numbers are kind of ridiculous, but it doesn't matter. The only time I look at it is when it's up. When it's like really up, then I open it and I go, wow, amazing. But I never imagined that that's my money. What I do is I open it and I take some money out and I turn it into revenue streams and real businesses. Then we actually have some emotions and we actually move. Okay, so now let's go to the next one. So here's some rules. Here's some rules. Do not act from a place of emotion. Emotion has absolutely nothing to do with investing. They're at odds with each other. What you feel is probably wrong. No, what you feel is guaranteed to be wrong. 100% to be wrong. As a matter of fact, do the opposite of exactly what you feel. Do you feel terrified? Buy some. Do you feel even more terrified? Buy some more. Did you run out of money and you're still terrified? Go to sleep. Stop looking at your portfolio. Are you super happy and greedy and you think you're getting rich? Sell some. Are you thinking you're really getting rich? Sell a lot. Right? It's like that thing, like, if, you know, what is it? If you're busy, meditate, and if you're really busy, meditate for longer, or whatever, right? So it's the same thing. This one's really important though. You have not lost any money when it drops, and you have not made any money when it goes up. Those chickens only get counted once you sell it. So you remember, like, okay, I went from one Bitcoin went from $3,000 to $70,000 to $30,000 to $70,000 back down to $15,000 that it's going to go to now. How much money did I lose? Nothing. I just wait until it goes back up to whatever, $200,000, and I sell it then. But you have not made any money when it goes up. You definitely haven't lost any money when it goes down. You will if you sell it. Rule number 3 is the patience part. Be patient enough to not enter the market and just take months and months of just, sometimes a year of just sitting there on cash and just waiting on the sidelines. Almost every time I've made a decision, I realize I should have just waited longer. Almost all the time, even I didn't have enough patience. And I've been here for 10 years patiently waiting for the world to catch up. But please have the patience of sitting outside the markets. And then once you enter, have the patience to give it the few years necessary for it to really show you the magic. Because the kind of numbers this thing puts out is just absolutely bananas. It's bananas. One kid made more money than 2,200 years of Warren Buffett investing in 3 weeks. One kid became a billionaire and he made more money than 2,200 years of Warren Buffett in 3 weeks. And that's a real thing. But probably about 1 million people lost thousands of dollars to that guy, right? So anyways, next slide, please. Do your own research on everything. When everybody says this, they just kind of like send you away, like do your own research. But what we mean is, if you can please tell me, what is it that you do? What is it that it does? And why it is, where the money's coming from. If you can tell me what it does and where the money's coming from, you've done enough research for you to buy it. And then research why it sucks. Research what's wrong with it. Research why you shouldn't buy it. Research the people who are telling you that it's going to go to zero or whatever. And then once you build a nice picture of an understanding of a fair reflection of what it is, then you buy it. Next, please. Or no. Don't do what everyone else is doing. Like, if everyone else is doing it, do the opposite. Like, in life, if you see everybody turn right, I just automatically turn left. Even if it's into a field, even if I'm gonna like fall over from my scooter, I don't care. My natural reaction is to always do the opposite of what other people do. Because you will end up at destinations that other people don't. In crypto, when your friends tell you to buy stuff, do the opposite, sell it, right? If your friend comes to you and says, buy this coin, first of all, say, hey, what does it do? And they just go, what? And you're like, okay, well then I'm definitely not gonna buy that one, right? Or do your own research on it. But if you hear about it on social media, it's over. If you hear about it on the news, it's over. You know who owns social media? You know who owns the news? They're the ones who are making all the money. They go make the money first, pump up the prices of things, release the news to you, and then sell the news. always sell the news. If you know something's going to happen by a certain date, sell right before that. Like, it never fails. And remember, 30% drops are what we call a Tuesday. If you put in $100,000 and you wake up you look away and then you look back and it says $70,000, don't skip your coffee. If it says 50% down, start paying attention. You're like, oh wow, this is something different going on. What's going on? If it's 70% down, 80% down, 90% down, 95% down, 96% down, 97% down, you put in $100,000 and it goes down to $3,000, you're fine. Because how much money did you lose? You see, you didn't lose any money yet. Because Ethereum went down 96% last time. It went down 96%. And then what did it do? 5,000% up. You want things to go 5,000% up, but you don't expect them to go 95% down? Right? XRP did 55,000% in a blink. It did nothing for years. Shitcoin, best performing coin in the whole damn place. Instantly, 55,000%. That doesn't even make sense. I don't even know how to like multiply those numbers, especially if you're doing it with rupiah, right? Imagine how many zeros that turns into, right? The other point with this is you're on a roller coaster. You're on a roller coaster, and it goes like this: wee up, wee and it makes you want to throw up when you're on it, especially if you put too much money into it. It's gonna be like, oh my God, it's great. Oh my God, oh my God, everything's coming back. And you're just gonna be on this like emotional roller coaster. That's why I say play in the way that you can handle and you can sleep for the next 12 years with. Because otherwise, if you don't sleep well, this game's gonna chew you up and spit you out because you can't handle roller coasters. Next one, please. All right, portfolio. This is what we were talking about. Let's go next. This is how I like to lay it out. 3 low, 3 medium, 3 high, 1 stupid amounts of risk. Great. That's an easy way of doing it. Different sectors. I need to be able to describe in a few words what the use case is for myself. The amount of dollars you put in, the percentage of your total portfolio, what's the symbol and what's the name, and which exchange are you putting it onto. You just make a list like that, and then you fill it with, some 3 low risk, 3 medium risk, 3 high risk, different sectors, different use cases. The same exchange is okay, but if you can have multiple exchanges, great. Spread out the percentages according to how convicted you are or how much knowledge you have, or if you have an edge in the space, right? All right, next. This we'll do next time. Yep. So let's say you've done that. You pick the coins and stuff. How do you literally enter, right? What do you do? How do you click the buttons, right? And what everybody says is dollar cost average, DCA. Well, okay, how do I DCA? Do I put in 5% 20 times? Do I put in 10% 10 times? Do I put in 30% 3 times, 33% 3 times, right? That's all going to depend on your strategy. That's also going to depend on your level of knowledge of what's going on in the markets. The thesis with dollar cost averaging, which simply means buy in little chunks, is you think it's going to go lower than where you bought it, right? Because you say, I'm going to buy now, but I think it's going to go lower, so I'll buy a little bit more, and then it goes lower, and then I buy a little bit more, and so on and so on and so forth. Or it's for the person who's like, look, I don't want to have to worry about when to enter. I don't really know enough to be able to say, I know what I'm buying, but I don't know when to enter. So then buying it in little chunks is great. Something like 5 entries with 20% each, pretty standard. If you want to spread it out more, 10 entries with 10 each. As soon as you get to like 20 entries with 5% each, it gets too complicated because you have to track your average price that you buy all these things for, right? If you're sure that it's not going to go down, and let's say you come in at 2020, end of 2020, when the market's just going like this, you don't dollar cost average then. You literally just buy a big chunk. Like, hey, this thing's running away on me. I'm just going to buy a big chunk, let it go up a little bit, and then we'll talk about how to take profits. Another way that people do it is automated orders. And then, I mean, for beginners, just to describe, you just literally go on the exchange, like you go on the Kraken app, and you go, okay, I said $2,000 goes to Bitcoin. So you go to the Kraken, select Bitcoin, type in $2,000 and buy, right? That's as simple as the process is. But another way that people do it is automated orders, but that's something that's like, it's a fool's errand these days, because they just, again, a toddler draws a line on a screen and goes, if it goes above this screen, I'm going to buy it. Smart money knows that that's exactly what you're thinking. They're watching your YouTube videos too. And they just literally send the price up to that level, get you to buy it, and then dump the market on you. So automated orders for trend-based stop losses, for taking profits is a good idea, but like for purchases, I don't really like them, but some people use them. That's to each their own. Some people do regular monthly buying. So they just, you know, every month just buy it. That's a good idea because it just spreads you out over the long term, right? Because this stuff is so undervalued. Like, we're gonna have 10 times as many dollars in the world within the next 10 years. That means the prices of everything are going up ridiculous amounts. Dollar prices are about to go rupiah prices, right? And this is very common. This happens all the time. Look at the European prices that are happening. The euro's dying, so the European prices are going up. So the numbers, you know, like back when it was 8/10 of a penny, people are like, there's no way it's like, there's a meme of a guy who's like, man, I shouldn't have sold my Bitcoin at $2. Now it's at $8. Because we could never believe, if you sold, you said 70,000 back then, and we're like, no way. I'm telling you, $1 million, $10 million, $100 million. It literally doesn't matter. Okay. 100 million rupiah. You want it now? Right? 100 million rupiah. That's cheaper than what it is today. Okay, $100 million. No way. Not the mighty dollar. Yeah, it's going to go the same way like it always does. Okay? So the numbers do not matter. What matters is how many coins you end up getting, right? If you're onboarding $100,000 or less, it's done differently than $100,000 or more. Okay? Because the well-to-do, the wealthy do not purchase things on an exchange. They don't pay any fees. They don't talk to computers. They have liaisons and people that, like for example, Kraken, you sign up for Kraken, do the intermediate verification, then you do the pro verification where they're gonna ask you questions about your wealth. Then you contact their OTC desk, the over-the-counter trading desk. And then that desk is gonna get you in touch with some really sweet people who are like always waiting for you to do stuff with a WhatsApp group. You ask them, hey, I wanna move $1 million. They'll go, absolutely, here's the bank account, here's the details, hit yes in the email, and then you can transfer it down here. You send them $1 million, your bank is gonna be more than happy to send this bank account $1 million because they receive billions of dollars a day. And your bank's gonna send the money, they're gonna receive the money without any fees. They're going to buy the crypto that you need, not from the exchange. Exchanges are for the average person where we pay fees. An OTC desk is where there's rich people waiting to sell and rich people waiting to buy, and they connect them together with zero fees and then let the transaction happen. And it doesn't move the prices. It doesn't move the prices on the markets, right? So anything over $100,000, that's how you buy it. More importantly, when you turn that $1 million into $100 million in like 4 years, and then you try to pull out $100 million, when that bank account sends that money back to your bank account, your bank doesn't freak out and panic from $100 million showing up. It knows, hey, this is a bank account and systems that send billions of dollars all the time, so it's showing up to you is a much easier pill to digest. And I know this probably sounds to you like, this guy's like, what, he's just pulling numbers out of it? No, I literally help people with this. There's people who made so much money that they can't buy coconuts with it. They have to illegally buy coconuts because they didn't figure this out from the beginning. They wanted to get rich, but as soon as they became rich, they got sudden wealth syndrome. It's being treated by doctors. Their guts are upset. They can't function. They feel ill all the time because they don't know how to move their money. And now it's so much that it just doesn't work well, right? When you make the entry, you have now taken actions which are regulated by the jurisdiction where your tax residency is. So whatever you're doing at that moment, whatever you've done, you've now taken a tax, you created a taxable event in that jurisdiction, right? What that means is you better know what your tax residency is and your jurisdiction is. And if you're somebody who's trying to avoid taxes, you'll never get rich. The rich don't avoid taxes. They just don't pay them. They pay all of their taxes. They just don't have to pay anything. They figure out a way to pay zero taxes. But they pay all of their taxes, right? But let me give you an example. if you're an Australian and you come to Bali and you don't have a quitas and you don't live here, your tax residency is Australian. Still doesn't matter. When you buy the crypto, Australia has said you bought an asset. The moment you convert that asset to anything else, you try to sell it or do anything to it, Australia wants 30% tax. You owe them 30% tax. But you come here and you're like, hey, like we can get you 0.71% tax from Indonesia. So then what we do is we move your tax residency to Indonesia, we establish you here, we structure your company, we put your assets inside of the company, and then when the company buys and sells those assets, they pay 0.71% tax. So you just saved 29.29% tax, right? But if you take these actions without realizing it, you may be making decisions which don't make sense. Like, give you another example. Short-term capital gains tax in the States is 15%, 30%, and then long-term capital gains tax is 15%, right? That means if you hold it longer than a year, 15%. If you hold it shorter than a year, 30%. So let's imagine you're at the year mark and you want to sell the very top. You sell the very top, you pay 30% tax. If you would have waited a little bit, the market would have dropped 10%, but your tax burden would have gone down 15%, so you would have made 5% more money selling it lower than where you could have sold it otherwise. But if you don't even realize, your accountant's going to tell you this later on, right? Or how about this? In many jurisdictions, not Indonesia, but other jurisdictions, if you bought something and it's down, sell it and rebuy it. Because when you sell it, you get to mark it down on the books as a loss on your taxes. So next time when you make money, you put in $100,000, it's down at $20,000, sell and rebuy the exact same thing, so you don't lose any money. You have the same amount of coins. You write it down, tell your accountant, hey, mark it down as 80% losses, deduct that from my taxes. By the end of the year, you make another $80,000. Take the $80,000 you made and deduct the $80,000 that you lost and put it together, and you made $0. But you made $80,000, but you paid zero taxes on it, right? So there's a lot of these techniques that the wealthy use to be able to, and they plan this before they enter. They have teams and teams to plan this before they enter, right? This is why this is a part of how to enter. And we're going to go through like taxes and tax strategies and all that kind of stuff. So first of all, any questions in the meantime? Am I speaking English? Does it make sense? Yo hablo inglés? Ah, yeah, das vidania, yeah. The point that we made about entering the crypto markets, people think entering the crypto markets just means buying crypto. There's literally like thousands of ways of entering the crypto markets, like thousands of ways, right? You can buy a crypto. You can buy an NFT. You can participate in a DAO. You can buy tokenized mines. You can invest in a company that works in crypto. You can buy nodes on a decentralized server blockchain. You can mine Bitcoin. You can take excess, like we're going to take excess power from Canadian power plants that are hooked up to hydropower that have extra power at nighttime. We're going to tokenize it and raise capital, set up server farms on the site to use the excess power to create value for people. It has like, it's not about buying crypto. We're buying power plants, right? There's literally thousands and thousands of ways for you to participate. Like you have zero money. If you have zero money, I'll show you a way to make money. Find me somebody who wants to invest in this mining token and I'll give you 7%. It's crypto adjacent and you can make money with zero money. We're building affiliate networks which are gonna be presented with eco-conscious. That's okay. They're going to be filled with eco-conscious projects that are driving the change towards the way that we want the world to be. And we're going to bring those to people and say, do you want a job? Do you want to live? Do you want to bring your projects in? Do you want to invest? Do you want to participate? Do you want to, I don't know, do you want to pray for us? We don't care. Like just be part of this whole mission, and you can actually be part of crypto and invest in crypto in a way that you normally wouldn't think about. Is it going to blow up now? Yeah. Okay. The other way that most people don't think about entering the crypto markets is your ideas. You have ideas. You guys all have beautiful ideas. We all have beautiful ideas. We all want to see the world a certain way. And you're probably like, it would be nice if they could change this, right? Like, for example, so when the mining thing came to me, they were like, we figured out a new way to mine. And I was like, pray, do tell. And they're like, we are not blowing up mountains. We're digging things out with diggers. I was like, okay, that sounds nice. What do you do with it afterwards? They said, we reforest the land. So that sounds great. What are you doing with the people? They're like, well, I should coordinate and collaborate with the people because we need a lot of the local people to do this. So we're like, okay, they have a say in this? Yeah, they have the biggest say. We're building them wells and planting avocado trees and giving them excess power. I was like, okay, how is the wealth access? They said, instead of going to a stock exchange, we let anybody in the world access the wealth. I was like, okay, so this is great. This is the world that I want to see. Let me contribute my time to deploy this for you, right? I have ideas about how to tokenize things. You guys have ideas about how to mine. And then they're like, we process it in a way that doesn't dump chemicals into the earth. All the chemicals are recycled. I'm like, great. That's the change I want to see. Let's implement it. We have so many great ideas that the technology is so easy for you to implement now, right? You just need to come up with the idea. Like a friend of ours came up with the idea of building completely like eco but spiritually conscious ways of living collaboratively together so that you can co-work, co-live, co-grow, co-heal. And she doesn't know anything about technology, but she has this beautiful idea and she fleshes it out, spent a bunch of her own money. The Norwegian government wants to give her money to be able to deploy into waste management. And then she comes to us and she goes, I don't know anything about technology, but here's my idea. We took that idea, connected it to people who have metaverse and XR dreams of like creating this XR world, and they have a ton of money to deploy from there. Connected it with people who are great at building communities and actually doing construction, brought all the resources together, and now blockchain, we're basically going to be building blockchain hubs everywhere. Park is actually the first one that's officially being turned into an incubator. And Park is going to become the space where great minds can come together to support great projects in every single way possible. And there's a million opportunities for whatever you do to be part of that. So you're entering the crypto markets without even entering the crypto. You're entering the game. You're entering the process, right? So hopefully that described a bunch of different ways for you to participate in this space. In closing, I just want to say, this is the first and only time in history that I think it'll happen that everything is being revolutionized. Everything. And I mean like literally everything. Everything you see, everything you hear, everything you touch, everything you smell, everything you taste, everything you feel, everything you are, every way you speak, what you use, the entire paradigm of the universe is we're literally creating new universes. Like that's how serious this is. And you're being given the opportunity to participate in that. If you do it right, money as a concept will disappear from the lexicon of the new earth. This is how money disappears. Money doesn't disappear by, if all of a sudden we magically make money disappear. Money disappears by you getting so rich that like you don't have to think about money anymore, right? That's how money disappears. But I want the people who are actually going to create the new earth to get the money. From who? From them, right? But we have this opportunity now. If you just dedicate yourself, if you apply yourself in this space a bit, and you can, again, we're constantly pumping out content that teaches all these things. If you can just learn this game in whatever capacity that it resonates with your worldview, and take a piece of it and start building the kind of world that you want, I guarantee you, this will completely revolutionize life, but it'll also revolutionize everything that we leave behind us. Because this is how I'm going to build the new earth. First, it's going to be through VR goggles. At the same time, we're building farms, self-sustainable food systems, co-living, co-working, decentralized societies where you can walk into Park with a card and live in Park for a minute, and then you can walk out to Singaraja and live in Singaraja for a minute, and you can go to Chile and you can go to Costa Rica, and all of them will have an NFT that allows you to float around. And you'll own nothing, but you'll be really happy, right? You will own, I don't need to own a house. I just need a few parks. I'll be very happy. I'm already very happy. I don't own anything. I'm extremely joyous, right? But we are now being given the opportunities to literally buy pieces of the future of that world. and done right, even just one of them done right, is enough to change our lives. A few of them done right is enough to change the planet. And if we all do it right and we pool together our resources, we can build whatever we want. We can build whatever we want. So thank you for your time. Thank you for being here. Appreciate you all. Right. If you're not part of our Telegram group, please join here. It's a beginners Telegram group where we post all of our content and you can have conversations. If you want to get in touch, scan this. If you would like to watch us on YouTube, please scan that. All right. If you want to sit down with us and go through your life and actually have all of this stuff we're talking about, please scan this and get in touch, or just come talk to us and we'll get it taken care of. Thank you.